What's going on, everyone? In this video I kind of want to show you guys, and I left a lot of this drawings on my chart to kind of show you guys how my chart looks at the end of a trade day. And the reason why I think this is important is because as the day is going on, there's a lot of different things that are happening inside of each and every single candle, right? There's structure that's being built, there's setups that are happening. Literally, I mean, truthfully, you can probably find an entry in every other candle, right? I mean, you could probably build yourself a reason as to why you should get long or why you should get short. And some of the things that are on my chart, and I'll just kind of go over them with you, is I've got some fib levels, some Fibonacci levels that go back to a macro time frame, the 1 hour and 4 hour time frame. I've also got some intraday fib levels in there. That's the white lines that you can see going across the screen. I always use the 20 SMA, which is the neon blue line that you see on the screen. And then the purple lines are just little flags and little, continuation breakdowns and trend lines and stuff that I kind of draw throughout the day to keep me on the right side of the trade. Okay. And if I kind of cover exactly what I start looking at is when I start to draw trend lines, okay, what I like to draw is multiple touch point trend lines. So I need at least two to make it valid. Although I wouldn't consider a trend line that has two touch points, like an A plus setup. But if I get 3 or even 4 touch points, it's pretty valid. So I typically try to look for 3 touch points. If I only get 2, I'll still mark it out on the chart a lot of the times. But I tend to be a little bit more cautious when I do enter those trades just because I know there hasn't been a lot of previous testing there in terms of price. So if we look at this downwards trend line, I've got multiple touch points here, at least 2 or 3, and I've got another one here. So I've got about 3 to 4 multiple touch points here. I've also got lower highs being put in. So until we break this downwards trend line, I kind of want to stay a little bit more short biased, okay? And we're looking at the 1 minute time frame, and you're going to kind of see, I don't mark them all out, but as I'm watching the candlesticks play out, and if I'm actively looking to trade and I see something that is appetizing to me and the way that I trade, I will mark things out. So you can see, I clearly see we put in this like little drop here off this candle. This is a 1 minute candle here, 24-point drop, and then we kind of bounce. And then we bounce and we bounce and we bounce and we actually test the 20 SMA. So as we're bouncing, I'm kind of just drawing this little trend line, this little flag, right? And I'm telling myself one thing: if we break through after having multiple touch points of nothing more than just a dead cat bounce, if we break through, I'm interested in taking a little bit of a scalp. And you're going to see here, once we break through, that price was around 21,595 and kind of drops all the way down to 21,587. And as a scalper, when typically I'm looking for 4 points, 5 points, 6 points, sometimes 7 points, if I take the break of this and I get in on this trade, I can use a quick area to stop out if we get back over the 20 SMA or the candle that I'm entering, the high gets taken out. So in this particular example, it's about a 5 to 6 point risk on this 1 minute time frame. That's not bad. That would be around a 1-to-1 R to R. And I'm looking for 5 to 6 points to the downside, and you can see you would have clearly got it here. Now once we kind of put in this low, it's also kind of matching up with this fib level that I had down here at 21,055. So I start to draw this trend line up in case we're going to reverse and hold, which we did for quite some time here. And you're going to see there's a little bit of a potential play here over the 20 SMA. There's a 20 SMA pivot. This is a strategy that I teach in Evolution Traders. Many of you guys are already familiar with it. And you get that long setup. And then you're going to see here, now that we're over the 20 SMA and I'm over this trend line that I'm starting to draw out, well, there's another little flag pattern here. It's only a 3-point touch point, 1, 2, and 3. And then once we break through and we get through that fib level, it does have opportunity to kind of run. So a lot of this stuff I'm doing on the live call, where if you guys are interested in kind of, following my chart as I'm trading and as I'm marking these things out and kind of hearing the ideas that I have, definitely going to want to join Evolution Traders so you can get on those calls. And I really like to trade the 1 minute chart more so about an hour to hour and a half after the market's open, because I can control my risk a lot better. ATR is a lot lower. So if you kind of look at it closer to where the market opens, even here, You know, ATR is sitting at around 13 to 15 points. And closer to when I'm looking to trade this stuff, it's around 11, you know, and at some points it's down here to 7. So I can control 7 points. I can control 11 points. Sometimes it's hard to control ranges and volatility when you're looking at 15, 20, 25 points. It's kind of hard to control your risk. And again, you could just kind of go through the way. We're still over the 20 SMA, so I still want to be long-sided bias. I can see a break over this fib level. We kind of pull back, and then I've got this downwards little flag or trend line, whatever you want to call it. And then once you get the breakout, you can take another quick scalp here. Now, I'm never really catching the whole move. I'm kind of just getting in, taking my 5, 6, 7 points and trying to get out because I am trying to keep that 1-to-1 risk to reward ratio. I don't realistically want to, you know, be sitting in it for too long and allow it to just pull all the way back, right? Once we get below the 20 SMA, we got a 20 SMA pivot play here, but now I'm looking to kind of stay short, right? So I'm using these trend lines and using these moving averages to try to stay on the right side of the trend. I'm looking long when we're over trend, and I'm looking long still, and I'm looking short when we're under trend, right? Same thing here. We're under trend. I'm looking to stay short on all these plays. And again, I'm just kind of picking my spots. And a lot of times I'm going to try to just take 1, 2 trades per account. And as long as those trades can finish green, I want to move into another account. And my whole sole focus is not trying to make $1,000 a day and trade recklessly and put on a bunch of size. My whole focus is trying to knock out 1, 2, 3 trades. And if I can be green after those handful of trades, lock it up, move into another account, continue to look for setups until my personal trade window is over, or I'm, you know, just flat out mentally drained from trading. Because again, you have to remember, this is very draining. There's a lot of times where you get into trades and you go into drawdown for a little bit, and you know, there's trades where you get in and they don't necessarily work. And I try to keep it as realistic as possible with all of you guys. You know, not every strategy, not every, you know, method, not every setup is going to work, right? You're going to run into a lot of losses. And the main thing that you need to really focus on is how you're handling those losses when they come, right? And you have to ask yourself the question, what do you do when you lose a trade? Do you double down and size up? Do you get upset and start to chase the move? Do you revenge trade? You know, what are the mistakes that are happening when you run into losing trades? Because again, if I'm being honest with you, when you lose a trade, even if you feel like the setup is great, it tends to irritate you. You tend to get upset about it. You tend to, you know, start to wonder, why didn't it work? And that's not what you want to do. What you want to do is have a short-term memory. You want to try to stay as disciplined as possible, and you want to try to get back in the game and in the swing of things, so you can just try to recover that money back organically, not because you're trying to recover the money back right away, because you feel that if you just get back in and you take the next setup, the money's going to come back. And that's what a lot of traders tend to do. The money will come back as long as you just keep sticking to the process and as long as you follow your risk. I believe that in order for you to be profitable, you need to focus on 2 things first. It's focusing on risk and money management. And then after that comes strategy. And then after that comes setup. And then after that comes technical analysis. Because if you can't manage risk in terms of contract sizings for the size account that you have, and you can't have a good money management system, knowing when to lock it up when you're red, knowing when to lock it up when you're green, that's when you can run into a lot of problems. And it doesn't really matter what strategy you're playing after that, because you're always going to be spinning your wheels in the mud. I hope this kind of gives you a little bit of insight to how I approach my days and how I look at the 1-minute chart and try to scalp this and stay with the trend as best as I can. Again, not everything that you're going to do is going to be perfect, and I understand that, but the whole goal is trying to keep an even 1-to-1 risk to reward on the day. Sometimes I do enter specific trades with a negative risk to reward ratio, but it's not like I'm risking $500 to make $50, right? Where potentially it's going to take me 10 trades to make it back. I'm trying to risk just a little bit more, especially with the Nasdaq, because of the volatility, just a little bit more to see it work out. But I have no problem in closing out the trade early if I can clearly visibly see that it's not working for my favor in a time manner that I want to see it in. But if I can focus on, you know, locking in a green day at $300 and locking out a red day at $300, that's a pretty much a 1-to-1 risk to reward. You know, so it doesn't have to be on a trade by trade basis. What I would look at it and try to do is look at it on a day by day, week by week basis. If you make $1,000 this week and you lose $1,000 next week, guess what? You're flat. There's no harm, there's no foul. But if you make $1,000 this week and you lose $4,000 next week, now we're in a bit of a pickle, and now it's going to take us multiple weeks just to even get back to flat, and that's not what necessarily we're looking for. We want to always make sure we can come back the next day or the day after. We want to make sure we can come back the next week, not 3 weeks later, right? So I hope you guys took something from this video. Again, if you guys need Apex accounts, use code DAnthony. That's going to give you the best available discount. If you guys would like to trade with me each and every single day live, where I'm marking out my charts in real time and get active in the community and go through my course and just different strategies that I use on a day in and day out basis, definitely that link is down in the description box. You guys can join if you'd like, if you like the aspect of having a community and things to go off of. If not, I'm on YouTube a lot. You guys will definitely see more of my videos. Just make sure to hit the like button. If you're not already subscribed to my channel, please do me a favor. I'm trying to get to 10,000 subscribers. I've been at this YouTube thing now for, I believe, going on 5 years. I would love to hit 10,000 subscribers. Do me that favor and just smash that subscribe button, turn the notifications on, and I'll see all of you guys on the next video.